Ladies and gentlemen, it's time for the John Truman Wolfe Financial Hour. Now, here's John Truman Wolfe.
Hello, America. This is the John Truman Wolfe Financial Hour. I am your host, John Truman Wolfe, broadcasting to you live from sunny Southern California. It's gorgeous out today, hot. The fires seem to be under control, which is great. The little valley in which I live was filled with smoke here for a few days, but seems to be under control or getting under control in Northern California. The Lake Hughes fire down here, much more under control. So that's good news. We've got a great show for you today. We're going to talk mortgages. We're going to talk interest rates. The Fed had their annual meeting today, which affected the markets. And as we do every week, we'll go over where the various markets stand today. The Dow 28,497 up 160. The S&P 3484 up 6. The NASDAQ 11,625 off 40 points. But if I can call them alternative, the alternative investments all took heat. Gold 1928 down 26. You ought to look at the gold graph. For those of you that look at the graphs, go to kitco.com and click the gold graph. And you can see it spike. It goes all the way up to about $1,980. And then when Fed Chairman Jerome Powell opened his mouth, it dropped $72. So gold closed at 1928, off 26 from the prior day. Silver, the graph on silver is the same. It was screaming up, and then Powell's comments drove it down. Closed at 27.06, off 26.90, off about 27 cents. The cryptocurrencies got hammered today, even more than the precious metals. Bitcoin 11,312, off 1.5%. Ethereum 381.50, off about 1.7%. And Ripple, those are the top three. 26.3 off. Ripple got hammered, off 5.3%. All of this seems to have stemmed from the comments by the chairman of the Federal Reserve Board, Jerome Powell. I'll read you a very brief summary of what seems to have driven down the precious metals markets and the cryptocurrency markets. Quote, the Fed now has a long-term inflation target of 2%, quote, over time, Powell said. This is supposed to be a big deal. This means that the Fed will likely try and push inflation above 2% for a period of time to make up for the sustained period of inflation below the 2% goal. Now, why that would roil markets is beyond me, to tell you the truth, because you get these pinstriped Fed speakers, and you need a dictionary to understand what they're talking about. Basically, the Fed has had a 2% target rate for inflation ever since I can remember. All right. So speaking of interest rates, we're going to come back and talk about interest rates and mortgages in great depth right after this. We're going to talk to one of the leading mortgage brokers in the country. I'm John Truman Wolfe. We'll be right back with the John Truman Wolfe Financial Hour. Stay with us.
In this time of global uncertainty, you need sound financial information to keep your investments, your future, as safe as possible. The Strategic Financial Intelligence Newsletter, created by John Truman Wolfe, #1 best-selling author and renowned financial consultant to governments around the world, is your most valuable asset. A monthly goldmine of the vital insight and insider information you need to stay on top. Right now, financial security is critical. That's why, for a limited time, we're dropping our price from $249 annually to just $99. That includes access to the entire Strategic Financial Intelligence archives, covering everything from precious metals, offshore banking, to cryptocurrencies, and the wildly heralded seminar on the covert agenda that has backed the U.S. dollar for at least 50 years and more. Sign up now at strategicfinancialintelligence.com. That's strategicfinancialintelligence.com.
We are back. I'm John Truman Wolf. This is the John Truman Wolf Financial Hour. We have with us today one of the leading mortgage brokers in the country. I mean, I can say that. I'm not sure he would. But joining us is Bill Butler. Bill, are you with us?
I'm here. Thank you very much for having me. Super.
Well, we're delighted to have you. What don't know where to start. I think I've told the story before, but in another life, when I was a banker up in San Francisco, we'd make a mortgage loan at a really, really super loan was 6%. More typically, they were 7 to 8%. Today, they're half that and less. What's going on, Bill?
Great question. I'll give you my opinion. Basically, the interest rates for a regular, traditional, conventional type loan, assuming the borrower has decent qualifications, they're running now between 2.5% and 3%. And what has caused that drop is the federal government and the Reserve Board stepping in and basically driving those rates down. So the cost of money to the banks and the mortgage bankers has been reduced, so they're passing it along to the public.
I mean, to state the obvious, and you folks that are listening that are, will have a mortgage on your home and you have refinanced very recently, and or are looking to buy a home and or are looking to sell a home, because the lower mortgage rates affect all of those circumstances. These numbers are historic. And if you can get a mortgage on your home for 2.5%, 2.75%, it's still 2%. It's next to nothing, Bill. This, as you say, has been created by the Fed. That's just driving these rates to, the federal rate is essentially at zero, and Jerome Powell, the chairman of the Fed, has said he's going to keep them there at least through December 2021. So the prospect of these lower rates appears are going to be with us for another year and a half or so, right?
I agree. Some additional information about why they're so low. Just as an example, I had a client call me today, and I got him locked in on a 15-year fixed-rate mortgage at 1.99%. I've been doing mortgages since 1978, and I've never seen them that low ever. Just unbelievable.
Unbelievable. Now, have the credit qualifications changed as these rates have dropped? Is it tougher to qualify for a mortgage?
Tougher in the sense, yes, in the sense that, the underwriting guidelines and qualifying factors for borrowers, they get tight, they get loose, they get tight, they get loose. It goes through this roller coaster ride. So what has happened since the virus hit is the lenders have loosened up on some of the guidelines. So it's easier to get it. But by that, I mean, you got to have a FICO score of at least 680. You got to have a job. You got to be employed for 2 years. You got to prove your income. Just all the standard logical things that have always been there. Now, on the other hand, due to the virus, there's some unique temporary guidelines that have been implemented. Because so many people have lost their jobs, the lenders are a little leery about making a loan to you or I, and then they fund it just to find out the following week you got laid off, right, and your income's gone. So what they're now doing is double verifying the employment verbally and in writing, and they want letters from the borrower stating that to the best of their knowledge, they're not going to get laid off or fired or have their income in any way cut back. But other than that, the guidelines, they're fine. They're easy to get.
I mean, presumably, we'll have to see because it's been a crazy year. But and while there's still a lot of people out of work, and there's a lot of kind of bizarre government mandates, the economy does appear to be coming back. Jobs are coming back. Some states are opening up. Some states are not. I live in the Republic of California, which operates a little to the left of Mao Zedong, and so the governor here is the governor here is a little bit what can we say? A little bit odd. A lot of pushback here against Governor Newsom and his policies. We'll see what happens. But the point being that a lot of folks now coming back to work, government's figures for the last quarter were 9 million people back employed. Of course, that's coming from a very steep decline. So, I mean, there were millions out of work, and now they're starting to come back. And I would presume that the lenders will begin to recognize that, and things will get back to normal in the mortgage world.
Yes, they are. Also,
go ahead. Yeah.
I just wanted to add there that what the lenders are doing with self-employed borrowers is they're asking for the traditional paperwork, last 2 years' tax returns, and then they want an unaudited year-to-date profit and loss on the business, and they're looking very closely at that to make sure that the business has recovered back to its income levels sufficient to qualify for the mortgage. If you're a self-employed person and the virus has just clobbered your business like a restaurant owner and you haven't been able to reopen and your income is down almost to zero, now's not the time to apply. You got to get the business back up, get the income back up, and then apply to take advantage of these low rates.
Right. Now, it would also seem to me that if you're a seller, a potential seller, these lower rates can be an advantage as well, because the buyers can more easily qualify. If the rates are down, that means the amount of the mortgage payments are going to be down. So it's not only a good time, I would think it's not only a good time for prospective buyers, but sellers as well. Does that make sense?
Absolutely, it does. It's, in my mind, it's supply and demand. When you lower interest rates, you're creating a lot more buyers who want to buy. And so then the sellers benefit from that because they'll have multiple offers, competing offers at the time they list the house for sale, and that in turn raises the prices up. So the sellers are getting more, and the buyers are buying more. And that will continue, in my opinion, as long as the Fed keeps these rates down low so that more people qualify and can afford that house, that monthly payment.
All right, folks, we're talking to Bill Butler, top mortgage broker. His number, by the way, 714-402-3206. John Truman Wolf. This is the John Truman Wolf Financial Hour, and we'll be right back.
Question: have you ever thought about making an investment in California real estate for the high returns available through trust deeds? As a trusted professional broker, Sun Pacific Mortgage and Real Estate has been helping investors earn high-yield returns on safer investments for over 32 years. Their trust deeds earn upwards of 13%. That's right, 13%. They invest in notes starting from $100,000 throughout all of California. where real estate remains strong. If you want to know more about high return investments through available deeds of trust, go to their website at sunpacificmortgage.com. That's sunpacificmortgage.com, or call them today at 707-523-2099. 707-523-2099. sunpacificmortgage.com, or call them at 707-523-2099.
When you really want Italian food, you've got to get to Columbo's. Columbo's Italian Steakhouse and Jazz Club, Colorado Boulevard, Eagle Rock. It's that little neighborhood place you wish was down the street from you. My dear friends, today things are so confusing. It's enough to boggle the mind. That's why it's vitally important. In fact, it's an absolute imperative that you indulge in brain food, provided by the noted Institute of Good Times and Great Yum Yums, Columbo's. Just come on down. Columbo's provides the remedies and elixirs, such as mouth-watering steaks, incredibly edible seafood, Columbo's family secret Italian specialties, and the pièce de resistance, the world's greatest meatballs. Imagine margaritas on the Columbo's patio, cerveza and other liquid refreshments, or take your pick and bring it all back home and enjoy the great indoors. Columbo's, saving the world from gloom and doom with great grub and glee. Happy, happy, happy Columbo's. Mangia bene.
Imagine this is your money and someone wants to take it from you. Who is it? The IRS. They want your money, and guess what? They can legally take it, all of it if they want. Remember, they sent you that letter that said, hey, you owe us a bunch of cash and we're going to take it from you. So what do? Fight back by letting our team of experts at the tax helpline work it out with the IRS so you can keep your money. And we're good at what we do. When you hire us, you get a team of guys on your side that know the IRS laws and will fight to save your money. So if you owe the IRS a ton of cash and you want to keep it, call right now and learn for free how we can help you put it back in your pocket.
800-932-1597. 800-932-1597. 800-932-1597. That's 800-932-1597.
All right, folks, we're back. This is the John Truman Wolf Financial Hour. I'm John Truman Wolf. We're talking to mortgage broker extraordinaire Bill Butler, whose number I'm going to repeat kind of throughout the hour, 714-402-3206. If you're looking to buy a home and looking to pre-qualify for a mortgage, or I was going to say more importantly, but for most of you, a refi. If you haven't done that in the last, well, let me ask Bill. At what point, Bill, does it make sense? Because these rates have been, they were down in the, fell to the 4s and 5s, and they're now down in this subterranean level. At what rate, at what existing rate does it make sense to consider a refi now?
Well, great question. The answer to that is it's relative to each individual borrower. If they have a high rate at 4.5% and they're still paying it principal and interest back, you take a look at that payment, and then you look at the lower rate and you run the new payment. My opinion is if you can lower your payment by $100 or more a month, it's worth doing. Because long term, you add that $100 up each month over the next 5 years, and you've saved thousands of dollars. Additionally, if you lower your rate from 4 to 2%, as an example, then you have to look at the amount that you're financing and paying back over the next 30 or 15 or 20 years, and realize that you're paying far less interest with the lower rate than you are at the higher rate. So you save money both ways, long-term and short-term. Another thing I'd just like to mention.
That's right. Go ahead.
Another thing I'd like to quickly mention, Bruce, is the earlier question of, are the rates going to stay down? When are they going to go up? Of course, nobody can guarantee that. But in my past 40 years of doing mortgages, working for banks, having my own companies, et cetera, et cetera, I have always seen that the interest rates are lower than they were in the preceding first two quarters. In other words, as we go into the third and fourth quarter, rates tend to drop compared to where they were earlier in the year. So there may just be a further drop on these ridiculously low rates as we go into the third and fourth quarters. Now, why do I say that? Two reasons. The national retailers do 50% of their annual income between Thanksgiving and January 15th. So they want the public thinking rates are low and I can afford to go out and buy stuff and hook up the credit cards or what have you. The second reason is political. The President of the United States, the congressmen, the senators all want the public thinking that the economy is good, their bills are down. That way they get reelected.
Now, I was about to make a political comment. I'll leave that to the side for a second. And I don't know if you can do this off the top of your head, or maybe you've got a fast computer there. But let's say a person's got a mortgage with a balance of maybe $250 at 4.5%.
Right.
250, 4.5%. And let's say you can get the person qualified for a 2.5% mortgage. What happens to their mortgage payment dropping from 4.5 to 2.5 with a 250 balance?
Okay. Well, I need to know what the mortgage payment would be at the start, at the 4.5. So let me just run some quick numbers for you. Let's just assume it's $250,000. It was a 30-year fixed, and he took out a loan at 4.5. That would mean that his mortgage payment was $1,266 a month, approximately.
Right.
Now, if you take that same mortgage and that same balance at $250 over 30 years fixed, and you drop it to 2.5%, that payment drops to $987 a month. So what's the monthly savings? Let me subtract one from the other real quick here. He's saving $279 a month on his monthly payment.
Almost $300 a month. Folks, we're talking to Bill Butler, a longtime mortgage broker who knows these markets inside and out and has available, we'll talk about this when we come back, various kinds of programs for folks. And if you're looking at considering a refi, give them a call just to see what it might do for you at 714-402-3206. This is the John Truman Wolf Financial Hour. I am John Truman Wolf, and we will be back after these messages.
Do you want to fly somewhere, anywhere in the world? Smart travelers call myflightsearch.com for the best deals on flight tickets. Going to Manila, Bangkok, London, how about Singapore? Call myflightsearch.com for the lowest flight tickets available. What about a local vacation? Let's say you want to fly to Vegas, Orlando, Miami, Los Angeles, or Denver. Pick up the phone and call myflightsearch.com right now. We have exclusive deals that you can't find anywhere else. The only way you can get these low airline prices is by calling us. We have so many low prices available, we can't possibly tell them to you right here and now. If you're flying somewhere anytime in the next 6 months and you want the lowest airline ticket prices anywhere, you owe it to yourself to save a ton of money. So pick up your cell phone and call myflightsearch.com right now.
Call 800-445-3166. 800-445-3166. That's 800-445-3166. Call now. 800-445-3166.
What are you going to do with your old car? You can try selling it, you could junk it, or you could donate it to Heritage for the Blind. Your car will be towed away for free, and your donation is tax deductible. Just call 1-800-785-9618. Heritage for the Blind accepts cars, vans, trucks, and boats. It doesn't matter if your vehicle runs or not. It will be towed away for free, and you'll be supporting those that need help. Heritage for the Blind is a nonprofit organization that helps the visually impaired live fuller lives. Call right now to donate your car, and as a special thank you for calling, you'll receive a free 3-day vacation voucher to many exciting locations. Call Heritage for the Blind right now, 1-800-785-9618. Donating is easy, and your vehicle is towed away for free. Plus, you'll get a free vacation voucher. Call now, 1-800-785-9618. That's 1-800-785-9618.
Attention Italian food lovers. Angelo's and Vinci's Ristorante in Fullerton, California is open for takeout with wine. Can you believe it? Angelo's and Vinci's Takeout is now able to offer you a nice bottle of wine to enjoy with your meal. Order today and get 1/2 price on our special selection of Pinot Grigio, Chianti, Chardonnay, Cabernet Sauvignon, and Merlot. Mamma mia! Order today at Angelo's and Vinci's from our complete award-winning menu and get some great wine for 1/2 price. We hope you're healthy and safe. We want to keep you well fed. Wapo's To Go Kitchen is open from 3 p.m. to 8 p.m. every day, or you can order through DoorDash. Pizza dough, bread, sauces still being made fresh every day. Angelo's and Vinci's named Best Italian Restaurant on the Orange County Hot List. Call 714-879-4022. Angelo's and Vinci's, 550 North Harbor in Fullerton, California. Call 714-879-4022. That's 714-879-4022.
In this time of global uncertainty, you need sound financial information to keep your investments, your future, as safe as possible. The Strategic Financial Intelligence Newsletter, created by John Truman Wolfe, #1 best-selling author and renowned financial consultant to governments around the world, is your most valuable asset. A monthly goldmine of the vital insight and insider information you need to stay on top. Right now, financial security is critical. That's why, for a limited time, we're dropping our price from $249 annually to just $99. That includes access to the entire Strategic Financial Intelligence archives, covering everything from precious metals, offshore banking, to cryptocurrencies, and the wildly heralded seminar on the covert agenda that has backed the U.S. dollar for at least 50 years, and more. Sign up now at strategicfinancialintelligence.com. That's strategicfinancialintelligence.com.
All right, folks, we're back. I'm John Truman Wolfe. This is the John Truman Wolfe Financial Hour. We're talking to Bill Butler, mortgage broker extraordinaire, about interest rates and mortgages. And one of the questions I had, Bill, I'm just trying to think back over the last year or so. These rates, correct me if I'm wrong, the rates dropped way down prior to COVID, didn't they?
Yes, but they weren't as low as they are now. They were in the low 3s to 4%.
Okay, so they were down, but they weren't. So this COVID world has, it's not COVID that's driven it down. It's the Fed setting the rates, but the rates have dropped. The reason I'm asking the question is I recall the Fed funds rate dropping to zero, I don't know, sometime last year, I thought.
Correct. But what happened before COVID hit and drove them down further, if you go back and graph out the 10-year bond yield, if you recall, that 10-year yield was spiking as high as 2.83%. And then there was a massive movement, and you'd know better than I about that and what caused it, but the 10-year bond yields now are down to what, 0.6, 0.7? And you see the mortgage rates are tied into that 10-year yield because it influences the price of the pool of mortgages when the lenders make the loans and sell them off to the government entities, Fannie Mae, Freddie Mac, and so on. So I think that drop is what caused a lot of the downward pressure.
Right. And I'm not sure if all the listeners know or understand, but typically a bank or a mortgage lender makes a loan, they don't hold those loans, right? They sell them off to Fannie or Freddie.
Correct.
Do they not? Yeah.
Correct. What they do is they take each individual loan and they put them into a group or a pool of mortgages, and then they sell that pool of mortgages off as a mortgage-backed security. And then the servicing, though, they retain, so the homeowner never knows this is going on behind the scenes. The servicer just knows I'm making my payments to Wells Fargo or B of A or whoever funded their loan. Because the mortgage-backed security pools, they don't want to get involved in collecting the monthly payments, et cetera, et cetera. So they buy these loans, but they let the original bank service the loan for its life.
And of course, the servicing fee, the bank gets a servicing fee.
Correct.
So they get ongoing income and not having that loan on its books.
Correct. So they get their capital replaced when the mortgage gets bought in the secondary market, and then they have ongoing income for servicing income for the life of the loan. And when they sell it to the secondary bankers that are buying this at a profit. It's called a yield spread premium. It's just basically a profit. So they make that profit, then they make the servicing profit, and they make the profit on what is up front to the homeowner and what's called origination fees, points, costs. And that's usually like minimally $1,000 per loan. So there's a lot of money in it.
Right. Now, when Fannie or Freddie, and these are for folks that don't follow such things, I mean, these are actually government owned. I believe the federal government owns both of those corporations now, don't they, Bill? I think.
Yes, they do. Fannie Mae stands for the Federal National Mortgage Association. Years back, coming out of Roosevelt's era, to price support the whole mortgage lending world when the banks were failing, they created these government, basically lenders. So in that group now you have Fannie Mae, Freddie Mac. They buy all the conventional loans. Then you also have FHA, the Federal Housing Administration. They're the ones that fund and insure the FHA loans. And then you have the VA, the Veterans Administration. They have their own special VA financing. And the last one is USDA, U.S. Department of Agriculture, that has mortgage financing available for all the rural families and borrowers, you know, the ranchers, or if your property's not in a city limit, you can qualify for that program. But
what's the difference between it? Yeah, okay. What's the difference between FHA and Fannie Mae, Freddie Mac?
FHA only finances that type of mortgage. Typically, in the conventional world, you got to put anywhere from 5 to 20% down. With FHA, you can put as little as 3.5% down. Another advantage of going FHA is your credit score may not be the best in the world. FHA will agree to fund and insure a FICO score as low as 500, whereas Fannie and Freddie say, no, 640 is as low as we want to go on the credit score.
Okay. And folks, you know, in case you missed that, you don't have to, you know, have 20% cash to go in and buy a house. There's a program that Bill's talking about, is 3.5% down, which is not, you know, which is not a king's ransom, not a king's ransom at all. So the FHA loans that get submitted to the FHA are of a lower credit standard than those that would go to Fannie or Freddie. Do I understand that right?
That's correct. And then coming back to the down payment requirement, you know, when you buy a house, you got to have a down payment. Well, FHA not only says, look, we'll give you a mortgage. All you got to do is put 3.5% down. But they also are so liberal about it that if the homeowner, especially the younger generations, they might have a good job, good credit, but they can't save up enough money for the down payment and stay equal to the way that the housing prices keep going up on them. So FHA says, well, that's okay. Go ahead and you can get a gift from a family member and do it that way. There's also grants available for the down payment.
Okay, folks, we're talking to Bill Butler, mortgage broker extraordinaire. We're going to be back and discuss these down payments on mortgages again. I'm John Truman Wolf. We'll be right back.
How would you like to save up to $500 on your next vacation package? Any vacation package anywhere in the world. Just call Superior Travel and mention the code RADIO and save up to $500. We'll design a custom, fantastic vacation just for you with all the bells and whistles. Not some cookie-cutter vacation, but a unique, all-included vacation customized by one of our exclusive travel experts. And our service is completely free. You pay nothing more. So why waste your time? Let us do it for you. We've got over 100 years of travel experience to help create the perfect trip for you. Call now and learn how to save up to $500 on your next custom vacation. Pick up the phone, call Superior Travel, and use the code word RADIO.
800-570-9631. 800-570-9631. That's 800-570-9631.
If Ernest Hemingway was alive today, would he say this to you?
Shakespeare, Mark Twain, Edgar Allan Poe, all great writers. And after reading your book, I simply must add you to the list.
Wait, you don't have a book yet. So make a free call to Page Publishing. Their expert staff can help you turn your book idea into a real book, a masterpiece that could someday make the bestseller list in hard copy and digitally all across the world. Page Publishing can help you completely take your idea for a book, write it, and publish it. So if you want to join the ranks of some of the most famous authors in the world, call now for a free information kit. Turn your book idea into publishing gold. Make a free call right now to Page Publishing.
800-378-3212. 800-378-3212. 800-378-3212. That's 800-378-3212.
All right, folks, we are back. I'm John Truman Wolf. This is the John Truman Wolf Financial Hour. We're talking to Bill Butler, mortgage broker for decades and a person who knows these markets inside and out. As we cut, and I said these markets, I'm talking about the mortgage markets. As we cut away for the break, Bill was reviewing the various programs available, and we just touched briefly But let's open it up a little bit. Bill, the veterans programs are very accommodating, aren't they?
One of the benefits if you have a VA entitlement to use is you can 100% finance your home purchase. And so no down payment is required. Additionally, some of the closing costs that a buyer has to pay for title and escrow and various other things, those costs are paid by others involved in the transaction, the seller, the real estate agents, the mortgage lender. So there is possibly what is called as a VA no-no, meaning no cash out of pocket for the down payment and no cash out of pocket for the closing costs. So literally the vet doesn't have to put a dime into it.
And are the credit requirements, so they don't have to put the cash up, are the credit requirements different?
No, they're still very easy to hit. Minimum of 620 is your middle FICO score. And many times I have vets call me and they want to buy a house and their credit may not be there. So one of the services I offer for free to people is, all right, let's get your credit fixed. There's a variety of legitimate, ethical ways where you can get that FICO score up and get it to meet the minimum threshold so that you do qualify.
That's terrific. Let's take just a minute here, Bill, and talk about the work you do for veterans up there in Montana. Can you talk briefly about the website and the services that you provide to veterans in Montana?
Okay. Yeah, a couple of years ago, I created a nonprofit. It's called Welcome Home, Inc. You can go to the website, welcomehomevet.net, and see all about it, the board of directors, what we do. But one of the services we do for the veterans is to try to help them get into home ownership after they've completed their service and they want to get on their feet and transition back into civilian life. For example, I had a vet come to me a couple of years ago. He wanted to buy a house. It was about $405,000, and I got him in at an interest rate of under 3% on a 30-year fixed, and created enough of a lender credit to where that money was used to cover all of his closing costs because the seller didn't want to contribute any. And at the end, he got a check for $1,500 to use to open up his utilities and pay for the moving trucks. This is like some financing that I've arranged with the two largest national lenders in the U.S. All they do is mortgages. They're not like Wells Fargo, a bank where they also lend for cars and credit cards. They're just mortgage specialists. I told them what I was doing, and they said, great, let us help too. So that's special financing, and I can offer that to any veteran who wants to buy a house in California and Montana. Those are the two states it's open in.
That's terrific. If there's any vets listening and are interested, Bill's number 714-402-3206. 714-402-3206. So how do you, we're kind of coming to the end of the segment here, but what's your point of view in terms of how this the mortgage market's going to roll out for the next, what do we got left, 3-4 months of the year? What do you see down the pike in the short term, Bill?
My best advice to all your listeners, Bruce, is if you're serious about doing it, whether it's a refinance or a purchase, do it now. Because after the Fed gets done pumping all these trillions of paper dollars into the economy, we all know we got inflation. It's going to come. How soon it's going to hit, I don't know. But as soon as inflation starts, these rates are going to go back up. So now's the time to buy. Now's the time to refi and take advantage of these low rates and low payments and save yourself tens of thousands of dollars. I would not wait till next year or the following year, even though the Fed is saying they're going to keep the rates low through 2021. I believe it, but you never know what wild card circumstances could hit the economy or the presidency and so on, and they could reverse directions. And then when they do, inflation's going to come back in a crash.
I went over this, I think it was last week, I'm not sure, but at one point, and just to make inflation, the subject of inflation, really simple, let's say there's 20 people in a room, and they all have $10, and I'm at the front of the room, and I've got an orange, and people want the orange. So the price of that orange is going to be $10. You know, that the money will bid for the orange. Now, let's say everybody in the room's got $100. What happens to the price of the orange? It goes up. So inflation is the amount of money in circulation relative to the goods and services that are available to purchase. And since the Fed has been pumping trillions of paper dollars into the economy, as Bill was saying, inflation is coming. All right, we're going to cut away here for a moment, come back for our last segment. I'm John Truman Wolf. This is the John Truman Wolf Financial Hour. Stay with us. We'll be right back.
Here's important new information from the Diabetes Solution Center for you, a family member, or a loved one suffering with diabetes. If you have lost your provider, or if you need a provider for diabetic supplies, you may qualify to receive your diabetic testing supplies now with little or no out-of-pocket cost, regardless of your age. All you need is Medicare or private insurance to be potentially eligible. Call the Diabetes Solution Center right now for details. Just takes a couple of minutes. Our friendly, knowledgeable agents will give you free, no-obligation information, handle all the insurance paperwork, and make sure your supplies are delivered directly to your door for free.
Call U.S. Medical Supply 24 hours a day. 888-912-1332. 888-912-1332. 888-912-1332. Call right now. 888-912-1332.
For the getaway of your dreams, come to Hawaii's Playground, Ka'anapali Beach Resort, on the fun side of Maui, where the world comes to play. Find your spot on Ka'anapali Beach with 3 miles of white sand, 12 resort properties, 2 golf courses, and 2 shopping centers. Enjoy the playground of Hawaii's ancient royalty. Ka'anapali Beach Resort is Hawaii's original master planned destination resort and home of the Hawaii Food and Wine Festival. With views of 2 neighboring islands, you can breathe in the land's natural beauty from your favorite resort or golf fairway. Come experience Ka'anapali's own special brand of Hawaiian hospitality with world-class dining, relaxing resorts, water sports, and activities of every kind. For romantic, family, and great friend getaways, discover the options of Ka'anapali Beach Resort, where the world comes to play. Plan your getaway today. Visit Ka'anapaliResort.com. That's KAANAPALI Resort.com. Question: have you ever thought about making an investment in California real estate for the high returns available through trust deeds? As a trusted professional broker, Sun Pacific Mortgage and Real Estate has been helping investors earn high-yield returns on safer investments for over 32 years. Their trust deeds earn upwards of 13%. That's right, 13%. They invest in notes starting from $100,000 throughout all of California, where real estate remains strong. If you want to know more about high return investments through available deeds of trust, go to their website at sunpacificmortgage.com. That's sunpacificmortgage.com, or call them today at 707-523-2099. 707-523-2099. sunpacificmortgage.com, or call them at 707-523-2099.
All right, folks, we're back for the final segment. I am John Truman Wolf. This is the John Truman Wolf Financial Hour. And we've been had the pleasure of having Bill Butler, a mortgage broker extraordinaire, on the line, talking about rates, mortgages, the Fed, etc. Bill, it's been a pleasure to have you. Finally, as a final note, again, for anyone looking to refi or buy, Bill's number 714-402-3206. And we'll have to do this again, take a look at these rates, maybe 30, 60 days down the road, Bill, huh?
That sounds like a good plan, Bruce. And just before we sign off, I just want to thank you for all you're doing to help us all out, understanding the truth about mortgages, Bitcoins, or what have you. It's really valuable information. It's good to know somebody sane like yourself is just getting the truth out of the bag. So thanks again.
Well, same to you, and we'll touch base down the road. Folks,
right,
that was Bill Butler, a mortgage broker for many decades, and this guy knows that world inside and out. So, as I say, if you've got an interest in refinancing or you're looking at buying a home, you ought to give him a call. Let me wrap up with what, again, is a pitch for our financial newsletter. And I am passionate about this because we provide information in the newsletter, which is at strategicfinancialintelligence.com. It's a mouthful, but strategicfinancialintelligence.com. And, we covered various things like mortgages, like gold and silver, like offshore bank accounts, like cryptocurrencies, et cetera, et cetera, et cetera. But we also make recommendations in there. The recommendation from one of the recommendations from the last issue, which was a gold mining stock, up last time I checked the numbers, 74% in 7 weeks, which is an annualized rate of in excess of 400. Current performance is no guarantee of future results, and always check with your own financial advisor. But my point is that we make these recommendations studying whether it's a gold mining stock or a cryptocurrency or just a regular stock of one kind or another. And it, in addition to the newsletter, which comes out monthly, every week we send the subscribers a copy of this show, both in text and audio. We have a service where we send the audio to these folks and they convert it to text. And so you can get the show and read it / listen to it at your leisure. strategicfinancialintelligence.com. It's we've had the retail price on the newsletter was $2.49 during the panic months here. We've dropped it down to $99 a year, which is $8 a month, which is $2 a week. And if we can't make you $100, we're in the wrong line of work. It's a good buy, and I think a good read, and will really provide you some vital information. All right, listen, it's been a pleasure being with you. I'm John Truman Wolfe. This is the John Truman Wolfe Financial Hour. We're with you every Thursday at 4 p.m. Pacific time, and you can also listen to the show by dialing pound 250 on your smartphone and saying CRN when you get the prompt. Okay, folks, we'll see you next Thursday at 4 o'clock Pacific time. Have a good weekend.